Joining us now from Chicago, the Brewer Investment Group, is Jim Hyerchek. He's the Chief Market Analyst at Brewer. Jim, good to see you again.
Thanks, Dan. How are you?
Doing great. Now, last week we had a fascinating discussion about the various financial products and services that Brewer provides out of Chicago. One of the things that really piqued my interest was when we talked about foreign currency exchange, or Forex. Can you describe what Forex is again to us, please?
Yes, as you mentioned, Forex trading actually stands for foreign currency trading. And unlike the New York Stock Exchange, which has a physical building, Forex trading takes place with an electronic network, and it's a connection of major banks, institutions, and multinational corporations. And they're linked together, trading various currencies from around the world, 24 hours a day, 6 days a week.
That's really interesting. Now, one thing that I think a lot of people would like to know about Forex is exactly what it is you're buying and selling.
Well, basically, you're trading the strength of one country's currency against another. For example, if you believe the Eurozone economy is going to recover from this global recession at a faster pace than the U.S. Economy, then you want to go long the euro dollar. If you believe the Japanese yen economy, their Japanese economy will trade weaker than the British economy, then you'd want to be long a British pound Japanese yen pair. So you try to pair up weak and strong currency markets.
Now, of course, when anyone's talking about the health of the U.S. economy, of course, a lot of that is dependent upon the employment reports. Those numbers this week, how's that going to affect the Forex market, do you think?
Well, the markets are now looking for about a job loss of about 171,000. And what that should do is, if it comes out exactly where it's at, probably it's going to weaken the dollar a bit. If it ends up that the report comes out worse than expected, I believe that the traders will be looking for safety of the U.S. dollar, so that will probably cause the dollar to rise against currencies. If you get a number that shows that the economy is improving, then that should increase trader appetite for risk, and that should drive up the foreign currency markets and drive down the dollar.
Now, I would have to think, Jim, that not only the job market, but so many other variables, so many economic variables would affect where the U.S. dollar stands against international currency, the price of a barrel of oil, whether or not the U.S. passes or doesn't pass a health care reform bill. I guess when you're trading Forex, you've really got to keep your eye on geopolitical events.
Exactly. Geopolitical events, interest rates, central bank policies. Right now, traders are focusing on whether the central banks maintain their stimulus plans. Traders are watching to see who lifts the stimulus plan first, which country's the first one to hike interest rates. All those factors are going into determining the direction of the dollar and other currency markets.
Well, Jim, for someone who's watching our interview and been paying attention to what we're talking about, they're kind of interested in taking a look and learning more information about Forex. What is it that your firm can help as far as steering them along the right path?
Well, the first thing you want to do is understand the risk of any investment that you get in. And foreign currency markets are volatile. They tend to have risk, so you have to make sure that you have the time and the capacity to watch the markets and understand and control their risk parameters. After that, you have to work with a firm that understands the fundamentals and the technical factors that go into deciding the direction and the movement of the marketplace.
Well, Jim, now you mentioned earlier that the currency markets, the Forex markets, are trading 6 days a week, 24 hours a day. So if I'm active in Forex and I'm asleep between 11 p.m. and 5 a.m., a lot can happen in that period of time.
Yes, it can. So you have to determine what type of trader you are, whether you're going to hold the market overnight or just trade during the New York session. The markets are broken up into various sessions. You have an Australian session, you have an English, a London session, and you have a New York session. So you can choose the time period that you want to trade. Most activity takes place when New York and London are open. So approximately 7 o'clock Central Time to about 11 o'clock Central Time is the most active period.
Fascinating discussion. Again, Jim Hyerchek, he's the Chief Market Analyst at Brewer Investment Group. If you'd like more information about what the company's involved in, go to brewerfuturesgroup.com. Jim, we'll see you next week.
Thank you, Don. Have a good week.
Take care.